you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to Morningstar. I'm Emma Wall, and here with me today is Jonathan Wilcox, Global Head of Retail Sales for M&G. Hello, Jonathan.
Good morning, Emma. Good morning.
So we're here today to talk about the quest for income.
Yeah.
It's within the realm of our Retirement Week special, but I thought we'd start by going back and to when base rate first got dropped down to the lowest ever rate of 0.5%, and what that really did for savers and what that meant for the investment market.
No, I think it's a very good point, because essentially in the last few years you've seen a complete collapse, as you said, in deposit rates. So in a world where rates have collapsed, investors then began to move and look at alternative options. So what we saw in about 2009 was investors then decided to go and buy corporate bond funds, which offered a high yield, be it investment grade, maybe some high yield bond funds, and they essentially try to clip the income from those funds to replace the loss of income on deposits. Because when you think about deposits dropping from 3 or 4% to half, it doesn't sound a lot in of itself, but maybe you've dropped your actual level of income by 70 or 80%. It was a dramatic drop. Moving into bond funds at that time, which were yielding around 4 or 5 or 6, allowed investors an alternative source. But of course, those yields have also come down now. So investors again, savers again, now have a different problem: is where do they go for income today?
And of course, we were just looking then at people who were investing money for maybe a proportion of their income if they were in retirement, because the rest of it would be made up with annuity income. It had to be made up with annuity income. After April 6th, we're now living in the world of pensions freedom.
Yes.
Meaning that people don't have to purchase an annuity, which means there'll be even more people looking to the multi-asset investment market to find income. I mean, where do they go?
Well, this is a really good, an interesting conundrum, because we never had a generation of savers with so much money. So the baby boomer generation that was born from 1945 to 1964 is the wealthiest generation this country has ever seen. And they've spent the last 20 years trying to accumulate their retirement pot. They've been looking for capital growth. I mean, technology stocks did so well in the 1990s. Everybody had a good run in the equity market up to 2008. So everybody's been trying to accumulate that pot. Then you had the collapse in deposit rates. Now that generation, if you roll the clock forward 65 years, they've been starting to retire from 2010 onwards. And they're going to carry on retiring, because in fact the biggest birth rate was in 1964 at the end of that baby boom generation. So they're not going to retire till 2029. So for the next 15 years, you've got a generation, the wealthiest generation of savers we've ever seen, coming through desperately hunting yield. Nothing to find in deposits today. Not much perhaps exciting in the corporate bond space today. So you're right, absolutely, Emma, that investors are now looking towards multi-asset income. But if you're a saver, and you said, of course, there's lots of optionality. You have annuities still exist, and they still offer decent rates, not as much historically, but who knows, those annuity rates may go up in time again. So you shouldn't ignore annuities. I think it's still a part to play. But as you're thinking about retirement here, you have to think about two things. How long am I going to live? And will my money still be around before I die? I could run out of money. So what you need to think about is, I need to go and find income from somewhere. Cash may not be right today, but it might be in the future. Corporate bonds are less attractive today, but they're still attractive deposit rates. But I don't know how the future is going to pay out. So we're seeing lots of savers and lots of investors coming to us and go, you know what, we don't know what to do. Can you take care of the problem for it? Can you look at something? And that is why multi-asset funds are now becoming very popular.
And is it the job of the city, because asset managers have these products which could well, fulfill what investors are looking for, as you say, but investors may not know about them, savers may not know about them, especially if you have a smaller pot and you're perhaps not willing to pay for advice. So how much responsibility does the city have to take on to educate potential investors out there? Well,
I think this is a very interesting point. So we talk about the multi-asset opportunity for savers, but at the end of the day, we've also got to communicate that. And I think the city itself has to get better at communicating. Fund managers have to get better at explaining what it is that we offer, what it is that all fund managers offer in terms of products, and not using jargon.
Jonathan, thank you very much.
It's been a pleasure. Thank you.
This is Emma Wall for Morningstar. Thank you for watching.